And now joining me is Alex Coffey, Senior Trading Strategist for Charles Schwab. Good morning.
Good morning. Thanks for having me.
It's a pleasure to have you on the show today. So let's just start diving into this conversation. Jerome Powell signaled that the Fed could cut rates in September. Presuming that happens, what sector should investors be bullish on, or how should they be bearish?
Yeah, this is a good question. And so whenever we're talking about the Fed, we kind of go through a process of what are they going to do? When will they do it? And then finally, we ask, why will they do it? Now that we have the answers to they're probably going to cut and it's probably going to happen in September, as we expected before the meeting and still expect after, the question will be, why are they cutting? In a situation where inflation continues to move lower, the next question is, what happens with the economy? What does the jobs market look like? If growth in the economy stay resilient enough, expect the areas of the market like the tech sector and consumer discretionary perhaps to outperform. But if you don't see the soft landing scenario and you actually see a little bit more of a bumpy landing or possibly even a more of a recessionary type situation, growth going down, inflation going down, then you'd also probably actually look towards the opposite because consumer discretionary and tech would underperform in that scenario. So you look to areas that are a little bit more defensive, which would be, of course, utilities, healthcare, and consumer staples. So that really is going to come down to the answer to that question of what does the economy do? What does growth look like? And we just don't have the data yet to know for sure.
Now, in the Q2 trader sentiment survey conducted by your firm, 25% of traders anticipated rate cuts of greater than 50 basis points in 2024. So can you see the Fed cutting rates in each of the final three meetings of 2024? And if not, what do you think is the timeline and what will that look like come September?
Yeah, so this, of course, was conducted back in April, so it's a little bit older in terms of when this data was actually collected. But about 40% saw, up to 50 basis points, which would be consistent with sort of that maintenance cut scenario, the soft landing scenario, which would perhaps be bullish for the tech sector in that scenario. However, in the scenario that you laid out, which is more than 50 basis points, possibly all three of the meetings, that's probably going to be more consistent with a bumpier landing. And so at the time, I think the July meeting was still considered to potentially be live. We're now through that July meeting. So perhaps if you're going to get a situation where we get 75 basis points in cuts in congruence or in order, September, November, December, that's probably a bumpier landing scenario. And maybe not the base case at the moment. Probably looking, as Art said at the top of your program, September, December would be the base case at the moment.
And while the Fed decision and Powell's comments were the biggest headlines during Wednesday's session, we're also in the heart of earnings season. And we understand that you believe that this week's earnings are actually more important for Wall Street. Why is that?
Yeah, I think this ties into what I said. I think the question now is, where does the economy grow? What does growth look like? No longer are we really wondering what the Fed's going to do. So earnings have my focus because they give us a glimpse into what the corporate growth trajectory and the economic trajectory as a whole really looks like. We've had so many of those giant mega caps already report this week, and we saw the impact that they can have. Microsoft gapped down initially. It really sent the market into a tailspin. It was able to recover, and ultimately it's kind of back to where it was pre those earnings, and it's allowed the market to breathe a little bit. Meta jumped after the close and continues to be strong, and that's helped bolster the market here. So as we look to the close today, Apple, Intel, Amazon are going to steal the show, in my mind, in terms of potential market moving factor here for the rest of this week.
And something else that you've also been tracking is the weakness in big tech. So what do you think is driving this sort of narrative, and what moves are investors making as a result of it?
All right, I'm going.
Yeah, on the macro front, I think some of it was perhaps an unwind of the Japanese yen carry trade, which did put a little bit of pressure on just assets in the U.S. in general. But as we look ahead now and we look at tech, assuming the growth trajectory stays strong, perhaps investors will see opportunity going into August and beyond in that more beaten up sector we collected some data as a result of something else from some different clients in terms of trading that are a little bit more actively involved in the markets. And the sectors they were most interested in was the information technology sector. They were markedly less bullish than they were going into July, declined from about 40%, saying they were at least somewhat bullish, to about 30%. But as we look ahead to August, tech is still in the minds of investors. And you look at the move that a name like NVIDIA made, gapping down to about $100, $100.01, I think, post Microsoft's initial reaction, all the way up to over 121 at one point in the pre-market today. You can still see why these names are so much in focus, as they're so influential on the market. But of course, they're have also been the ones that are moving the most.
Well, thanks a lot, Alex, for joining us today. A lot of important information there.
Thank you.